Coach with none other than your captain, Trav 𝗀𝗶𝘁, and myself, James 𝗀𝗶𝘁. And today we're going to be discussing some of the rumblings, the thoughts, the observations as to changes, systemic and structural changes that are being floated around in terms of industry or the potential impact for brokers as to what is being considered for structural changes in the future. What this means in terms of your ability to de-risk and safeguard your broking practice, and how you can continue to operate with clarity, with structure, with confidence, despite some of the thoughts that are happening in the ether. Now, before we get into that, Trav, our last session together, you were about to head into your national conference. That's since happened, so maybe just give us a quick takeaway in terms of what that experience was like, and anything that you noticed or observed whilst you were there.
Yeah, really, really good conference. It was really well put together. The content was really good, and some of the conversations I was having with some of the brokers and some of our industry partners was really, really good. If you can hear my voice right now, I apologize. I overindulged last week on multiple nights, and now I've lost my voice, so I'm struggling a little bit today, but that's okay. Probably one of the pressing things I want to talk about was in relation to the opening address from our CEO, David Bailey. He talks about some things, but actually, before we start with that, I'll talk about quickly about his closing address at the gala dinner night. So we had a very nice gala dinner night where everyone was dressed up, and in his closing address, he put ousted me by name and told the entire room of about 700 brokers that I was a male stripper for Magic Mike. And in DB's defense, that's what I was dressed as. So it was quite a funny night. But yeah.
Well, I've since seen the photograph, and there's no denying that's exactly what it looked like. And for the remainder of this interview, I might just call you Chip, which is short for Mr. Chippendale.
Yeah.
So let's go with that one as well.
Yeah, I had a beer with DB after he ousted me on stage, and I said, mate, you know what? I'm actually pretty good at writing alone too. You do realize? And he's like, Trav, no one cares. So it was pretty funny. It was a really really fun night. But probably where we'll start as a good starting off point is in his opening address. He was talking about what's been happening in the industry.
Yep.
It was quite vague about this thing, but it really piqued my attention
Mm-hmm.
around, because this is something that I've thought about with our industry for quite a while now. And he talks about I'm going to quote him here. I think his words he used was a rising temperature.
Yep.
And around, obviously, we're talking about our increased market share, like
Yep.
we're nearing 80%. And so talking about he didn't mention too much, but what I sort of took from it was, and this is only my assumption, right? That we're going to start seeing some pushback from the banks. They're going to start trying to claw back some of their market share,
Yep.
and we're going to start seeing some changes in the industry moving forward off the back of that.
So let's discuss that in a little bit more detail, my dear friend Chipper, if that's okay with you. So first of all, we know that brokers are in or around 76% of home loan origination. So in terms of trajectory, do you see that going up? Do you think it'll stay the same, or do you think it has the potential to reduce on account of strategies that the banks may look to employ? Or lenders, I shouldn't just say banks, lending institutions.
Yeah, I don't think it's going to go drastically one way or the other, but there was some talk at the conference around it reaching as high as 85%.
Mm-hmm.
Um, and that, to be honest, the people that I was talking to were saying, look, 85% is almost too much. Like it wasn't that long ago we were what, 40, 50%, right? So
Yeah.
we've increased our market share quite quickly, right? And it's
2014, I think you cracked 50% from memory.
2014,
I think.
50%, and we're now, yeah, so we're 10 years on and
Yep.
we've almost doubled our market share. So that's impressive for the broker channel, but it does raise some concerns. So yeah, you're right. I see my general feeling is that broker numbers are going to decrease over the next 5 years. I believe that the banks are going to push back on us. There is going to be some changes. Look, we're seeing that their online origination, they're talk that like they're pushing their branch lenders a lot harder now, and putting, I think they're increasing some banks anyway. So yeah, I think we are going to see some pushback from the banks, and I've had some discussions, and we'll talk about this through the podcast around what that will potentially look like moving forward.
Yeah, it's interesting, right? I've got a friend that has a significant amount of loans, and he asked me, should a broker be able to get the same deal as a lender if you go direct? And I said, yeah, of course. And same pricing, same everything. And he said, yeah, well, that's what I would have thought because that's why he has been using a broker for well over 20 years. So I remember
Yeah.
the first broker he ever introduced me to, still remember that broker's name with Mortgage Choice, who still is a broker, albeit probably in the twilight of his career these days. Uh, and and so yeah, my friend has been using brokers for well over 20 years, and he essentially went direct to a lender recently and got significantly different pricing, more favorable for him. And there were things that the lender was prepared to do that either the broker didn't know about or was unable to offer. And it's a broker that would be highly, highly capable because my friend's situation is highly complex. And yet, I think he found it very interesting that what was being offered direct was significantly more compelling with a major institution.
Yeah,
Which
you make a
I'm
really
not
good.
advocating for that, by the way. I'm just saying that was
No,
an observation he made.
yeah, I was having a conversation with somebody in our industry, very high profile person in our industry, very well respected. And I was saying, well, we're having a conversation about exactly this, right? And I was just saying, look, my hope is that I have no issue with competition. I have no issue with competition with other brokers. With the broker channel. I have no issue with competition with the banks,
Yep,
provided it's done ethically.
for sure. Yep.
And he said to me, that is not going to happen. He said there is going to be some underhanded things that are going to happen from particular lenders. It's just it's going to happen, and that to me sort of raises some concerns where like it, and that's what I'm worried about. Where we see it happen, right? There's particular lenders where I know for a fact that they're training their branch staff on channel conflict, not on how to avoid it, but on how to execute on it, right? This is, yeah, I mean, then we talk about,
This, by the way, was not a lender that you would usually come up in that conversation when I've heard of those things happening in the past. So
okay,
I'm not trying to suggest who it is. I won't do
yeah,
that, but it is not one that would typically have a reputation as essentially undercutting the broker.
yeah, yeah. Yeah. So like channel conflict is a real issue. I've heard of situations where branch lenders have DLAs where they can approve an application provided it fails servicing by no more than $1,000 a month. Like $1,000 a month, like servicing failure. That to me is a pretty significant failure, right? And they've got
Hello.
the ability to prove it. Like I'm this is a rumor, right? I haven't seen this, but these are things that I'm hearing, right? So
Yeah.
I can't say that's accurate, but that's
Well, you'd
pretty
think at face
concerning to
value
me.
it isn't because, I mean, on that basis, that would be approving loans that are probably going to default. And so, at least in theory, on the basis of what you're saying, that doesn't make a lot of sense, even though
Yeah,
there may be rumors and innuendo out there.
yeah. So it's around trying to. I sort of understand, right? With these, if there's going to be, let's call them underhanded tactics that are taking place, to try and improve their competitive advantage in the marketplace, I sort of understand why they're looking to do that. Like when I look at us as a broker channel, I feel like we have a competitive advantage, right? We can choose multiple products. Like even at you look at the way we negotiate, I've had some discussions with clients around this. Like I'm not here trying to sell you a Ford Ranger when you really want a Toyota Hilux. If you want a Ford Ranger, a Toyota Hilux, a BT, whatever you want, right? I can sell it to you in the sense of a mortgage, right? We've got a whole suite of products. Then on top of that, once you put the layer on top of that is, I'm not trying to get the best price I can for my product so I can increase my margin. I'm actually trying to get the best price. I'm trying to reduce. I'm trying to reduce the margin to get my client the best possible product and the best possible pricing, and it doesn't affect my commission. So us brokers are in this really unique position where we've got a whole suite of products we can offer, and there's no benefit to choosing one over the other for a broker.
Yep.
And then the better we negotiate on the client's behalf, the happier the client is, the more likely they are to be able to retain them, the more likely they are to refer their friends and family, the more likely we are to get a Google review. So we're in this really unique position where we are well and truly on the side of the client, where if you look at a typical sales relationship, the salesman's trying to get the highest price he possibly can, and the client and the consumer's trying to reduce that prices. We're actually on the side of the consumer on this side. So
Yep.
we do have a competitive advantage. And that's why I think that's one of the reasons why I think we've been able to increase our market share over the last 10 years.
Not one of the reasons. That is the reason.
Yeah.
It's an incredibly compelling and attractive value proposition in the eyes of the people that are using the service. And so, if anything, the question would be, how did people not come to this realization sooner? But that's okay, because the industry is arguably getting towards more of a mature stage now, and the people that were using brokers in the 90s and even in the early 2000s were probably still what you consider your early adopters. And and I guess you've got your laggards that are now sort of catching on at the back end, because the middle group has certainly swayed towards that channel. So let's look at this, right? So from the point of view of understanding the predominant amount of lending that originates with home loans comes from the broker channel. Do you think that lenders will be looking at structural changes that, or potentially strategic positioning to aid the distribution of their products? And if so, do you think that they're going to lean into the broking channel, or are you suggesting, or is there ways that they might explore otherwise? I'm going to answer that initially, in my opinion, because I think as I sit right now, it's easy for me to say this, and I don't know if I'd have the same view, which is, again, I see the value in the broker channel. I think some lenders categorically do, and they lean heavily into it, and they see that as essentially as a distribution channel, and an attractive one, and an affordable one. And so I wonder if they're sitting at the board level, considering how do we continue to make better use of the resources already available to us, or do they think, how do we continue to optimize our footprint in the marketplace as far as physical locations are concerned, our digital location, or are they considering a combination of the two? Which I guess probably makes more sense to be looking at, well, how do we continue to leverage the tools and resources and assets we've already got? How do we make best use of this third-party channel, and therefore continue to win favour of the opportunities where our policies will fit the requirements of the client?
Yeah, I've seen an article recently, which compared to, let's call them, two of our bigger banks in Australia, and they talked about one particular bank that's seen a massive decrease in market share, and then in comparison, another bank that's seen a massive increase in market share, so they're comparing the two banks, and the bank that's seen a massive increase in their market share, they've invested heavily in technology. They're very pro broker channel, so they run a very high tech, low cost base, very, very efficient, great SLAs, great products, great rates, and their loan origination has increased. It just increases year on year, and they're getting bigger and bigger by the day, right? And that
Is that
they're
a top four, or is that someone that's outside the top four? It sounds like a lender that's outside the top four.
let's call them top five.
Yeah, that's what I
Let's
thought. That's
let's call
fine.
them top five. I think the
Yep,
big I think I think the big four is now the big five. So I think
sure.
everyone can make their own assumptions on that. And
Yep,
I'm not going to oust anyone here,
sure.
but yeah, but that this is a bank that's been performing very, very well, and they're very, very supportive of the broker channel, right?
Hey,
But
I want to use them,
oh
and I don't even write loans.
yeah, 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 100%. I've made that my home is with them right now. So and I think they're amazing, right? And that's a model that I'm really surprised that other lenders are not following. And it's crazy to see like they're trailblazing, and I
And
think
they
to us.
don't have a physical footprint either.
No, no.
So they're clearly leaning into these other platforms and mediums very, very effectively.
Yeah, I'll give you an example, right? Like, I remember I was doing some insurance comparisons, and I was actually using a major insurer that's aligned with a bank, and we were comparing, and they said, "Oh, Trav, we can't meet that price." And I'm like, okay, well, I'm moving. They're like, "Yeah, but you don't understand. When you have an insurance claim, you can't go into a branch. You're gonna have to do it over the phone." I said, "Mate, why would I want to go into a branch? It's insurance. Like, if I smash my car, I want to make a phone call. You tell me which panel shop to send it to, and I'll get it fixed. I don't want to see anybody." The last thing I want to do is go in. Like, they're trying to sell it as this value proposition of you can go into a branch and you can physically see someone and talk. I'm like, I don't want that.
So I wonder, when you say that, whether physical locations are potentially being considered either a liability or something that will evolve and change over a period of time, and that we still have them in part to accommodate the so-called legacy customers
Mm,
that were used to this through the 70s, 80s, 90s, and maybe even the early 2000s. And yet the generation perhaps ahead of us is the ones where once they can or don't use some of those physical premises in the future, that we might see potentially more closure and therefore the ability for to lean into again the other channels, distribution channels that will help the lenders connect and engage with their audiences.
exactly. So there's some brokers I've spoken to that come from small country towns, and one of the what they're hearing from their clients is it's really important to them that they can physically go into a branch. And we find that in country towns, they're generally an older demographic. They're probably not as they're probably not as up with tech as what we'd find. So as we find the next generation, there's studies around where the next generation they actually don't even want to talk on the phone anymore. They want everything in
Mm.
text message or emails, right? So this is where we're heading to. So the day of the branch, I can't remember the last time I walked into a bank branch, to be honest. Nor do I feel like I've got the need to. So
Okay.
this is where we're heading, right? And these banks that are investing heavily in branch and branch lenders and those sorts of things, I just don't see it being a viable option. But this is
It
their
might be as
strategy.
part of a 15 to 20 or even a 30-year strategy that recognizes that they will potentially reduce their physical footprint as part of reallocating that focus and energy and funds into other means to retain and grow their market share.
Definitely. Yeah.
So let's talk a little bit about regulation. Actually, yeah, we'll go regulation and then we'll talk a little bit about commissions and some
Yeah.
of the potential changes there. So we've touched on this in the past, but just to discuss it again, regulation. There's a couple of ways that this could be considered. One of which is what regulatory requirements might be stipulated for brokers to operate in terms of more stringent, I should say, um, requirements. So around their duty of care to clients and following the best interests for obviously servicing each client. I'm not sure that we're going to see a great deal of change here because I think that's already been fairly well mandated and brokers didn't really need that um, legislation in place to do what they were already doing because
Mm.
it was because they were doing such a good job that they won the advocacy that caused the repeat business and it caused that wave of people to go from the 50% to the 75 that we're now seeing, in my opinion. I think where we probably will see some further change though is in the eligibility to become a broker in the first place and what that looks like in terms of formal requirements, studies, or skill sets that need to be developed before you can start prescribing medicine, practicing law, or in this instance, offering someone a home loan when you may not necessarily have a great deal of other experience behind you to do that, as is the case right now.
Mm. Yeah, definitely. That's probably one of the big issues I see with their industry at the moment as well is the barriers to entry are so low, but the barriers to success are so high. Like you look at the attrition rate. I don't know the numbers. I'm fact check me on this,
At
but I hear
8% per annum,
8%.
and there's approximately 60% of people in their first 12 months will discontinue being a broker.
Now those numbers are concerning, right? Like 60%. So six out
Yeah.
of every 10 brokers won't make it past year one.
Yeah,
Right?
so I don't have the source. Well, I sort of do, but it's unofficial for the
Yep.
60%, but it is in and around that number. The 8% is as per the MFAA's Industry Intelligence Service or Survey report, the most recent edition, which was number 19 from September
Yeah.
2024.
Yeah. So those numbers are concerning, right? That's so the barriers to get in, like you need a Cert 4. Well, you probably need a diploma these days. Like you can get away with a Cert 4, but you won't get your credited with certain lenders based on a Cert 4 these days.
Yep.
But those barriers are quite low, right? So it does create these issues, and this is where I think broker numbers will probably reduce over the next 5 years as opposed to increase. What that does to our market share, I don't know, because then like if we want to pitch ourselves against the lenders that have the lenders that are actively employing branch lenders, I'd want to understand what the minimum education requirements are for them compared to what the minimum education requirements for us, and that might be the path of least resistance for people looking to join our industry. So there's so many factors at play there. But you're right. It's with regulation. I got no issue with regulation. Like when we look at best interest duties, everyone sort of when we see an increase in regulation, everyone sort of throws their hands in the air and goes, "This is ridiculous. Why do we need to do this?" I'm like, I'm doing this anyway, and I've just figured out ways through technology on how to streamline how we are able to provide that information as way of best interest duties or requirements, whatever, right? So
Yeah.
it's not an issue for it's not an issue for us. Like if they, I agree with you. I think probably when we talk about regulation, I think we're probably where we need to be. I don't think it's going to see a huge increase, but yeah, but that barriers to entry is always going to be a big problem.
Well,
I don't know how to
I
solve
spoke
it.
to someone recently who, to his credit, reached out to have a conversation with me essentially about running his business a whole lot better than he was. And part of my initial question to him was, why reach out now? And he said, look, I'm 12-ish months in. I thought this was going to be a pretty easy and cruisy thing to do, and it's clearly not. And obviously he elaborated on that, but that was the gist of what he was saying. Is he thought
Mm,
running a business or in a broking business particularly. Now, I don't need to go on about the fact that
yeah.
we all know that there's going to be challenges in broking, as there are in every industry. So curiously though, just as you were saying this, and knowing that a Cert 4 might cost somewhere between, and in some degree, some ways, almost a race to the bottom in terms of some of these suppliers, not all, but some of them proudly trying to make it as cheap as possible. And in this instance, I'm not sure that cheap is better. But in any case, several $100, I think, to a couple of grand-ish or more for a diploma. And yet a law degree might cost you, and it's set up to about 280K, but it's suggested between about 17 to 25K per annum per student. And law degrees, I think, are 5 years. And an accounting degree, which is not an unreasonable comparison, is somewhere between, according to Google at least, 15 to 17.5K per annum. And so we're talking the better part of 45 to say 60 grand. And it says up to 30K for, well, that's international students. So sure, they always pay a bit more. But again, 45K to 55K for one of these degrees versus several $100. Well, I can see why some of these other people would think to themselves, is this as legit as you think it is? And I'm not saying it isn't, but I understand why people would put that question out there.
Yeah, 100%. But then you look at it from the other side of things, right? So you're talking about a $700,000 Cert 4, but then when you look at your
Not
path,
700 grand, $700.
$700, sorry, $700. All right, so it's nothing, right? So, but then when you enter the industry, like we interviewed a guy recently who was very, very talented, and I think he would have been an amazing broker. And when he looked at what an entry level support person, which is the position that he would take, he would have accelerated quite quickly.
Yeah.
He couldn't afford to take the job. He's not prepared to take $75,000 a year. Like he was in IT earning twice that, right? So he's got a young family, right? So that there's if you're a lawyer and you come out of school and you do your law degree and you rack up a big HECS debt, what would a junior lawyer be earning? Probably $120,000 a year, maybe. I don't know. Like it's far more than what a junior broker is going to earn in the
Well,
first
and
year.
I would say that's not unreasonable. They've spent 5 years developing
Mm,
their skills, their knowledge, their capabilities to be in a position where the earning potential reflects that. Now, fortuitously for brokers, that isn't the case. Is the investment, at least in a dollar term, is
mm.
virtually negligible. Sure, the entry level earning capacity might also be a little on that low side, but there's a substantial amount of brokers that would be earning well in excess of half a mil per annum, and frankly, a lot of them that are earning well over what a partner at a major accounting or law firm would earn by comparison to the yeah the what, those roles. And so they're on par, if not in excess, of some of those other vocations. So
I
it's
found
pretty
enough.
good.
I fo-
The,
I
the
found enough.
outside is
Found
pretty
enough.
attractive.
Yeah, I found enough information recently, and I told my new guy, and I think it really stands true for our industry, right? So it's the affirmation reads, either go out and take a chance or go work for somebody who did, and that's essentially what our industry is, right? If you want to take a chance, if you want to take a chance, you have the ability to have an uncapped income. It's based on your performance, right?
Yeah, correct.
But if you're not prepared to take that chance, don't be, you can't, like, you go, well, I want to earn what these elite brokers are earning, but I'm not prepared. I'm not prepared to go through that pain of 2 years of barely being able to put food on the table, right? Like it's a hard one, but you got to, yep.
Um, Hey, by the way, 71 grand to 76K apparently is the ballpark range for a junior lawyer.
Yep.
So
Okay. It's lower
there
than
you
I
go.
thought. Yep.
Now, uh, commission. Talk to me about commission and what you're hearing, noticing, seeing, or yeah,
So we've seen recently in New Zealand, the Westpac Group have actually abolished trailing commission. So I think they're trailing their upfronts for like 0.6, they've increased them to 0.9 and no trailing commissions. That to me is quite concerning, right? That that that's I believe that's similar to the UK model, right? And they seem to be able to make it work. It'd be interesting to watch and see what happens in New Zealand over the coming months and years. But that's a real concern. We see this is one of the things that I'm probably not happy with. I think our industry bodies do a great job, but everyone's been pushing around clawbacks. My opinion was probably I was probably an outlier with this. We should have left the clawback we should have left clawbacks exactly as they were. Now we're seeing this sliding scale of where it was sold in our industry as a win. But what they've done is they've reduced the clawback periods and the amounts, and all they've done is reduce the trail. They should have left the trail where it is and left the clawback where it is. I got no issue. I had no issue with the clawback arrangement that we currently had. So this is the more we push on these things, we've got to be careful what we get. Like we're not. I think sometimes it's my, off the back of what we're doing here. I just want to find an array. I want to find a situation where we can work. But the banks aren't our enemies. They're our industry partners, right? That this is who we're working with, right? We shouldn't be working against them. So let's
agreed.
find a way that we can work together.
Yeah,
And us pushing as hard as we can on clawback is not that's that's us just trying to that's us just I don't know it just doesn't work for me. So yeah, and commissions are something similar, right? Like there'll be I think we'll see changes to commissions in the next 5 years. I don't have any issue with the way commissions are derived at the moment. I would like to see them stay exactly the way they are. That's my opinion.
very cool. So I've got two more questions here. One of which
Yep.
is beyond what brokers already do, which is significant in the eyes of the consumer. And I say that through the lens of 76% market share. So people are voting with their feet. What, if anything, can a broker do that will help continue to retain market share, if not grow market share, and make themselves indispensable in the eyes of consumers and potentially also in the eyes of lenders?
I think we're already doing it. I think we've really raised the level of professionalism in our industry since I've been in the industry. That's for
Yep.
sure. I know,
Yep.
look, well, different for me. I come in with no experience at all. The level of professionalism which I operate now is at a level that I wasn't operating at 12 months ago, 2 years ago,
Sure.
5 years ago, right?
Yep.
So if we continue to increase our professionalism and improve our value proposition, we will always be the preferred choice. I think we will always remain the preferred choice.
Yes.
I think we will start losing the occasional deal through those things we were talking about with the lenders, where them being able to apply, let's call it a different policy. It might
Have
not.
access to discretion that the broker may not have.
That's probably the perfect wording for it, right?
Thank you.
Yeah. So
Yeah.
you are going to lose them. You're just going to cop them on. You just have to cop them on the chin, I think.
Yep.
Um, so yeah, increasing the level of professionalism and increasing your value proposition
Yep.
is it. I think is paramount here. It's around being their trusted advisor. We will have this conversation with our clients quite a lot. Like we do, I've got quite a vanilla deal, and I'll tell my clients, I'm not going to lie to them and say this is complex. James, you could walk into any branch on the main street of Coolangatta there and probably get the same deal. What you will not get with them is the ongoing strategy and structure that we will work on over the next 5 to 10 years, where we're going to build your portfolio, where we're going to make sure it's structured correctly. That we might get to a point in 3 or 4 years' time where the lender that we're selected now is no longer serving you. I don't want to refinance you out of a lender to another lender. That's a lot of work, and it's not really. But if your strategy changes or the market changes or the bank's appetite changes, I have the ability to move you to a lender that's better suited to you in the
Yep.
future, if that's so the case. But
Makes sense to me.
for this particular deal, where you can walk in any of the banks in Main Street of Coolangatta and get the same deal that I'm going to get you right now.
It reminds me a little bit of a bloke I know who, a very, very good broker as well, also deals with a lot of investors. And I know for sure something he used to say, I don't think he's writing as many loans these days, but when he did, would say, look, with everything I've just presented to you, so he'd literally lay it out, present it all to them as in like, here's the visual diagram of how we're proposing to structure your loan or loans, and he'd say, you're welcome to take this and run it by any other broker and get their opinion, second opinion, third opinion, and because he was obviously confident in what he did. And to some degree, he was almost challenging the client, if you don't believe me, but I know for sure virtually nobody ever did that. And I remember saying to people who were also in his group, please don't do what he does. He has the charisma to get away with it, and people don't actually do it, but he was essentially very confident in what he did. And of course, that was conveyed in how consumers receive it, which is to say, look, it's good enough for me and just happy to proceed. So, last one, you might have just touched on it, which is, do you think that the name of the profession might evolve over a period of time to potentially being something like a debt strategist or a financial advocate or something else? Or is that more on the broker to choose a name other than mortgage broker as relates to how they choose to position themselves in the market?
That's a lot of brokers are playing with different job titles that more aligns with what their value proposition is, and I think that's great. Whether we see a big shift from mortgage broker to mortgage advisor or strategist or whatever the case may be, yeah, who knows? But I think you're right. I think you're right. Like we play with these as well in our business, and it's yeah. I agree. Mortgage broker is probably a little bit dated.
Hey Chipper, I'm just curious, what title do you give yourself?
Yeah, so at the moment I'm principal lending specialist, but
There you
like
go.
but like considering what we do, like it's probably more strategist than specialist. So we are sort of thinking about how we're like and we're looking at offering different ongoing products for our clients, which would probably require me to change my job title. But yeah, it's sort of I wear like 10 different hats. So at the moment, principal lending specialist is what I call myself. Yeah.
Excellent. For everyone who listened to today's episode, thank you firstly for being able to give of your time. We hope that you saw some value in this. If you're watching this on YouTube, by all means, put a comment in there and subscribe to the page. Other than that, we encourage you to continue to be focused on your clients, doing the very best you can, and of course, control the things that are within your influence to ensure that you continue to move yourself and your business in the direction you want to go from a professional and personal perspective. So with that in mind, thanks very much
Can I just make? I just want to make one more.
The opportunity to be of service to you.
Can I make just just one more quick topic, one more quick point here. So I just want our industry to exercise caution here, right? Like it's easy to sort of alarm bells and the sky's falling in. Let's just look back at what happened through the Royal Commission. I don't know about the other aggregators, but I know about my aggregator. They were very proactive, and then industry bodies like FBAA and MFAA, they did an amazing job transitioning us through that Royal Commission period, and I think we came out of it in a really strong position based on what they did. Nice. So let's entrust our aggregators and our industry bodies because that we've seen it. It's not like they will come out and talk a big game and go into battle for us on this. Yep. But the history shows only a few years ago how well they were able to navigate that for us. So I've got a lot of confidence, particularly in my aggregator and the industry bodies, for us to transition us through this period. So it's not alarm bells. Let's just go back to work on your value proposition, and let your aggregators and industry bodies do what they're getting paid to do, which is lobby and to continue to strengthen our industry.
Nicely said. Alrighty, said like an absolute true Chippendale / broking lending strategist. So with that in mind, everyone, again, thanks very much for your attention and the opportunity to be of service to you. We'll catch you on the next episode. Bye for now.
Thanks.